Hi, I'm David Russell, a partner with Social Venture Partners, and I'm so excited to welcome you to bigBANG's Fast Pitch Competition, where we will award a $25,000 impact investment to businesses. So today, super excited. We've done this for 4 years now. We'll actually hear from one of our previous winners, Canary, a little later in the program. But first, I want to introduce the three judges who will be with me today. The first is Cheryl Austin.
Good afternoon, everyone. My name is Cheryl Alston. I'm the Executive Director and Chief Investment Officer for the Dallas Employees Retirement Fund. It is a $3.6 billion fund for the civilian employees of the city of Dallas, and I'm so happy to be here.
Thank you for joining us today, Cheryl. Next, we have Jennifer James.
Hi, everyone. Jennifer James, founder of Strategy House, LLC, located in Dallas. So excited to hear all of these great companies today. Our primary focus is product innovation, technology, and social impact. So excited to be here again today. Looking forward to it.
Thanks for joining us, Jennifer. And last but not least, Juan Thurman.
Hello, everyone. My name is Juan Thurman. I'm a director at Southwest Angel Network. We're an angel network in Austin, Texas, where we invest in social impact companies. I'm excited to be here, looking forward to hearing the pitches.
And thank you, Juan. So these three judges today will help us in what is undoubtedly a very tough decision to make, as we have three great businesses we're going to hear from. And all these businesses have their own focus, but they have a few things in common that I want to highlight. One of which is they're all Texas-based businesses, which we're very proud of. The second of which is they're all founded by people of color and provide diversity as we continue to look to put capital into those types of entrepreneurs. But last and certainly not least, they're all trying to make a social impact as well as make a financial impact into the community. I want to thank all the partners who helped make this possible. So that's Michael Cope, Gwen Eccles, Dick Evans, Matt Lillard, Sherry Wolf, Chris Young, and my personal favorite, Heather, who you guys will hear from now. She makes a special introduction, a special announcement for Social Venture Partners.
Thank you, David, and thank you, judges, and thank you, entrepreneurs. We're so excited for today, and to all of the PRC members. It's been a fun year working on ways that we can make SVP Dallas a bigger part of the impact system and to create more impact opportunities for investment here in Dallas. As we heard Suzanne Beagle and Kathy Clark say in the most recent event, how can you get involved? And SVP Dallas wants to get more involved. We're very excited to announce collaboration with Southwest Angel Networks. We looked at a lot of wonderful opportunities this summer, and we decided this was a wonderful way to get started. And Southwest Angel Networks is based in Austin. I'm going to be running the Dallas-Fort Worth chapter, and it's a mission-driven investment group. So providing ongoing support for early stage companies that are addressing significant social and environmental challenges. Southwest Angel Networks believes that providing education to investors and entrepreneurs is a key element to accomplishing this mission. And that's a key thing that we thought was really important. SVP Partners also believes highly in education. You can go to the website, swanimpact.org. There are some webinars coming up for those of you interested. There is just what is impact investing, angel investing, what are the mechanics, and then how do you measure impact? Those will be starting November 10th, and they're open to those of you who are interested. The goal for SWAN is to invest in companies that are working to mitigate environmental damage, promote clean energy, and companies that are working to reduce social disparities, including health, educational, economic achievements, and treatment by the criminal justice system. So since 2016, 50 angels have made $5.5 million worth of investments in 23 companies, and 45% of those companies have founders who are underrepresented. So we're really excited. This is an opportunity for people who want to do gender lens, racial lens, you name it, clean tech, healthcare. So we're excited about the opportunity. And thank you, Juan, for joining us today. And we can't wait to see who's going to win. So I'm going to turn it back over to David. Thank you so much.
Thank you, Heather. And enough of me now. Let's go ahead and get to the pitches. We're first going to hear from Nathan at Credit Mountain. Nathan, take it away.
All right, can everyone hear me now? Fantastic. Well, my name is Nathan, as I mentioned, and I'm one of the co-founders of Credit Mountain. And we're on a mission to reinvent the client experience. So the problem that we're trying to solve is kind of twofold here. On one front, rejecting borrowers is a lose-lose proposition. Marketers or banks, financial institutions spend a lot of money on marketing and underwriting. And ultimately, when they have to reject a borrower, that's a sunk cost, and the borrowers leave with a bad taste of the brand in their mouth. Additionally, we believe the situation is going to get worse as a result of COVID-19. We fundamentally think three things are going to happen. As the stimulus packages continue to dissipate, we're going to see consumer credit scores decrease. As interest rates go down, we think there's going to be a demand will increase for credit, but kind of paradox with the credit market tightening. We're already seeing that happening. Individuals who previously could have got approved for a mortgage at a 650 are being told to come back when they have a 700. If you're Black or brown, this problem is all too familiar. From research, the Mortgage Disclosure Act, and a lot of the research has shown that Black and brown applicants on average are rejected between 50 to 80% higher than their counterparts. But this problem stems all over the United States. Roughly only about 1 out of 3 individuals have a prime credit score. And that's why we see rejection rates across credit types being so high. The one that stands out to me, once again, are mortgages, where we sometimes see about 40% of people who are applying for mortgages getting denied. The opportunity kind of came from seeing 2 different things. One, if you do a quick search to say, hey, what are some apps that help me improve my credit score? You know, an article that came out for 8 apps, out of the 5 of them, those are credit monitoring. And the last thing you need when you have a bad credit score is another app telling you how bad that credit score is. On the other side, Apple, who's constantly innovating and paving the way for innovation, launched a program called Path to Apple Card. And now for individuals who applied for the card, instead of just getting rejected, they get invited to a 4-month credit worthiness improvement program. And after speaking with the folks at Goldman Sachs and Apple, around 50% of people who opted into this program actually wound up getting the card. So that's what inspired us to launch Credit Mountain. And we're a B2B SaaS solution that allows lenders to offer their rejected borrowers a path to approval. On one side, we're credit improvement as a service. So this goes far beyond your typical monitoring. We actually create customized plans for consumers. We utilize a variety of different tools and features and help that consumer improve their credit and their financials. On the other side, it's a path to approval as a service. So this allows lenders to stop rejecting the borrowers and start offering a path to approval. This will help them retain customers, keep them within their pipeline, reduce their acquisition costs, and also gather more meaningful data about the consumer throughout the process, which will help them for underwriting. In a lot of ways, we like to call ourselves Credit Karma 2.0 meets Path to Apple Card. So now when a bank rejects a consumer with a simple handoff to our platform, we do a few things. First and foremost, we evaluate the approval criteria set by the bank versus the existing situation of the borrower. Then, based on looking at their credit profile and their bank statements and all the data we can gather to calculate their flexible cash flow, we create a customized plan for them from a variety of tools and features that I'll discuss here in a slide. And based on that specific plan, then we automate the process every month of moving their money and their data to get them to a point where they're going to reach that criteria. And when they do, we'll be offering them to reapply, often with a pre-approval. So how exactly do we do this? We do 3 things with the consumer's extra dollar and 3 things with their data. On the money side, we've reinvented the credit builder loan, freeing up consumers' cash flow. And now for only $5 a month, a consumer can add positive payment history to their credit report. We also have a pay off debt faster tool. So we create a debt pay down strategy. And then based on looking at the cash flow of the consumer, add a second payment to each trade line at the strategic time each month to reduce their interest costs. And also this is scored favorably in the credit underwriting models. And lastly, we have a smarter savings account. So what makes it smart is being able to figure out what's the most high leverage use of that next dollar. If you have $3,000 to invest, are you better off adding $3,000 to your down payment or paying off $2,000 of debt and putting $1,000 more down on your home? We do that math for the consumer. On the back end, we do rent and we help the consumers report their on-time rent and utility payments directly to all 3 bureaus. We have a credit dispute resolution tool. So this is similar to traditional credit repair, but about for 90% less of the cost, we're actually able to automate the process of identifying potential errors on the consumer's credit report. And then with direct API access to the bureaus, help the consumer go through that process of disputing those errors, once again, in a completely automated fashion. And the last thing is a clean slate credit profile. A lot of times lenders would ask us, okay, you take this individual from a 620 to a 680. How do I know they're going to perform like a 620 and not a 680? And our answer to that was to build a more holistic picture of the consumer. The FinReg Labs has done a lot of great research at looking at the efficacy of cash flow underwriting as a way to supplement traditional FICO scores. And so we've taken our specialization that we've built on that in some previous endeavors and baked that into this product to present a cash flow underwriting picture to the lender, while also giving an environment for the borrower to paint a more holistic picture of themselves. Our traction to date, so we actually landed, I think this speaks out the timing of this product and how much it's needed. We were actually able to close 2 enterprise deals since heading in this direction. One with the Cornerstone Credit Union League. So they're the largest credit union trade group in the country. They represent 500 credit unions, and they're going to pay for us to deploy our white label SaaS solution at 5 strategic credit unions with the goal of building up a playbook to then deploy it at the other 495 in their network. On the other side, we wanted to make sure as well and participate with other fintech companies. So we're working with Auto Approve. They are in the auto loan refinance space. At the moment, they have about a 65% rejection rate. And so they see our tools as being very helpful to help consumers who sometimes it's as simple as just paying down your debt so that your LTV matches the criteria. And they see our tool being able to do all those aspects for them and help them see that approval rate increase. It's myself and my co-founder, Frank. Frank, prior to this, was actually involved with Catholic Charities and led a $6 million project focused on poverty alleviation, studying the effects of poverty on the brain, and additionally looking at the impact that financial coaching could have. And he's taking a lot of that knowledge and bringing that into this product. So I appreciate you guys for your time. Excited to answer any questions you might have.
Nathan, that was a great pitch. Thank you for that. We're now going to open it up for the judges for a 2-minute Q&A. Judges?
Great pitch. A couple quick questions. What is the typical length for a consumer to go through your program and get ready for approval?
Sure. So, we kind of base that answer on 2 data points. One, with the Path to Apple card, we saw the average consumer take about 2.5 months to get to the point of approval. And additionally, for some of the better off credit unions, they've had in-house financial coaching and credit counseling departments to help consumers. And for people who are in a position where they are mortgage ready, it takes anywhere from 2 to 4 months on average to get them to that point. It depends on where the most high leverage moment could be for them. But our target, with kind of the optimization in mind, is to make that sweet spot right around 3 months for a mortgage.
All right, this is Cheryl. I had a quick question in terms of what is how much have you raised to date? What are you looking to raise? And then what is your exit strategy?
So Credit Mountain's been entirely bootstrapped by myself and Frank. Now that we've closed these deals, we have a lot of revenue pipeline coming through once we deliver the product. So we're right now just self-funding this, trying to get it to the point where we can deliver it to land the revenue. And what was the second part of that question, Cheryl?
Thanks. What was your exit strategy?
Banks for a large part have not developed their own software for years. 90-something% of banks don't have even internal software developers, mostly IT. So there's a lot of software providers who essentially acquire new technology to resell to banks. So we see core providers being a large opportunity for us, along with obviously the credit bureaus as well, who have been partnering with fintechs to kind of drive credit score improvement and at the end of the day result in more loans.
Cheryl took my question. I wanted to know about the exit strategy there. She had a 2-part there. So that's awesome. Good job. You have any plans on growing the team at all, Nathan?
Yeah, we just actually hired a CTO, a fractional CTO, who's working for Sweat Equity. He actually came from Jack Henry, understands the banking core software space, sees what we're doing as a major need and a way to drive kind of the efficiencies of the bank from a bottom line perspective. And so he just joined us about 3 months ago to architect the solution. And then we have 4 full-time engineers in India.
Okay. And what would you plan on doing with the funds if you were to win the competition?
We need, now that we've closed these deals, we really got to hire some more engineers. I mean, luckily, given the cost of engineers offshore, for the money we can receive, we can at least bring on 2 to 3 more people, which is crucial for us to hit our delivery date. Both the credit union and Auto Approve are expecting us to go live in January. and without raising kind of the extra funds or digging deeper into our pockets, where it's slowly starting to drift off track. So it's a top priority for us right now.
Okay, perfect. Thank you.
No problem.
Well, Nathan, you set the bar pretty high. We're going to hear next from Danny at Scriptly RX. Danny, the floor is yours.
Thanks, guys.
All right, awesome. All right, can everybody see the slide okay? Okay, awesome. So I'm excited to let everybody know a little bit about us. We're Scriptly RX, and we are a socially conscious drug savings mobile platform. The problem that we're attacking is a pretty large one. The PBM industry is a $400 billion industry that profits from complex and ambiguous fee structures that it implements against its participants, right? And it leaves uninsured patients, insured patients, employers, pharmacies, government programs like Medicare and Medicaid trapped in a walled garden where they can't easily access affordable medication. And it's a problem that everybody feels. The majority of Americans feel it. 50% of people who are uninsured, or sorry, that are insured, go outside of their insurance to find deals on platforms like ours or platforms like GoodRx. 60% of employers say that the pricing for their drug benefits programs are unreasonable and unsustainable for the organization, and often look to switch every enrollment period. So our solution is to bring transparency through technology and business values to disrupt and remove excess fat and bring true value to consumers and customers. The market size is a pretty large one. 4.5 billion claims get processed every year. Of course, that number is growing. Our target market focuses on a subset of that. A little over 2 billion of the claims that are processed every year is what we're targeting through our platform. Now, what makes our platform a little bit different than what's on the market today is our flexible design. Originally, our platform was designed to only serve uninsured patients, but through 2020, we actually found that there was great opportunity to also serve PBMs and employers directly. So we've expanded our platform to do just that. And the way we help them, long story short, is we provide each one of these market channels with the clearest pathway to savings, whether they be a patient, an employer, or a PBM, which is a pharmacy benefit manager. And our competitive advantage is really fueled by the fact that we only work with transparent PBMs, and it allows us to do things that our competitors can't. Things like being able to pass rebates 100% back to clients, letting patients compare against their insurance, providing in-network and out-of-network coverage simultaneously. These are all things that we could do by the nature of our platform. Again, some things that a lot of our competitors cannot do. Our revenue model is relatively simple. On the direct-to-consumer side, it's transaction-based. So if you're an uninsured patient or even an insured patient and you want to just do a quick fill, we get $3 per one of those RX fills. If we, for a B2B company that we work with or an employer that we work with, they'll essentially license our platform and they'll be paying a SaaS fee for that. This is not in our revenue model now, but we thought it's important to note. The data that we capture is really, really rich, and we're starting to find different ways to leverage that for external partners, for drug manufacturers, employers, PBMs, insurers, et cetera. And so it's something that we're looking to fold into the revenue model in the future, and we thought it was important enough to share with the group today. Our traction to date has been primarily on the direct-to-consumer side, and we've helped to generate over $2 million in savings through 2019 across 1,700 cities, and you can see the heat map there. Two things I could not put on here yet because we're still in negotiation is we actually have 2 pharmacy benefit managers that we actually have their final offer in their inbox right now to license our platform. One is the largest transparent PBM in the market, and the other one is about a mid-sized PBM. Our social impact focus is very, very singular. And it's to stop the PBM tax that's happening on drugs right now. Essentially, every time you go to pay for a medication, your dollar is essentially worth 60 to 70 cents rather than a dollar that it should be, due to those hidden fees that middlemen put on the cost of drugs. So what is the result that Scriptly has? For every dollar that we make in revenue, we create $38 in social impact. That's $38 on average that stays in the pocket of the consumer, the employer, what have you, that would normally be going to a middleman. What we're looking for, what we're looking to raise is 600,000, and we're looking to reach 2.3 to 2.5 million users with that round. Our team don't have a lot of time, but they're awesome, both on the employee side and the advisory side. And that is all we have. Thank you very much, and open up for questions.
Thanks, Danny. Very strong pitch. Judges, you have 2 minutes.
Yes, Danny, this is Jennifer. Good job. I guess I was going to go right into the financial piece on how much you've raised. I know you're looking to raise 600K, but how much have you raised thus far, and what do you plan on doing with the monies if awarded the award here through bigBANG?
We've raised $90,000 so far. We also have a new investor that is going to be investing $50,000 with us. That deal has not yet been inked, but we provided him with the paperwork for that. And what we're going to do with the money is all of the money is going to go to the development on the B2B platform side. We have 2 PBMs that are ready to license the platform. And what's really cool about our platform is that it's already built out, and we just have some essentially back-end structuring that we need to do. So all the monies go directly to development.
Okay. Thank you.
Yep.
Hey, Danny, this is Juan. Tell me a little bit about your gross profit model, and does it vary between B2B, B2C, and PBM customers, or is it the same for all?
Yeah, so on the B2B side, our operating cost is essentially about 3 cents per active user on the platform. That's baseline cost. As we grow, that'll increase a little bit. So every dollar that we make above that is margin.
Thank you.
I applaud you for entering the healthcare space, because it is a crowded space and everyone's trying to take costs out of the system. So what do you tell your prospective clients? What is your singular competitive advantage?
Yep, the singular competitive advantage is transparency. The CEO of Drug Channels actually did a great study on GoodRx's S1. They just went public here recently, and he asked a very poignant question after looking at their files. And it's essentially, are companies like this just perpetuating the problem that the drug industry is seeing? And the conclusion at the very end of the article is that, without credible, transparent competitors, companies like GoodRx and traditional PBMs will continue to wreak havoc on the market and continue to see crazy profit margins at the expense of consumers like us. So transparency.
Thank you.
Yep.
Well, Danny, that was awesome. And I'm really happy to see that, just given the current times that we're in, that we've had 2 businesses that have really obviously been accelerated, given what has been going on and are needed more than anything. But last and certainly not least, we have Joseph and Chris with Common Relief. You guys, it's on you.
Hi, everyone. So Joseph Akintola here to talk about Common Relief. Relief is just a few clicks away. Okay. So right now you can get a mortgage in 5 minutes. You actually can. But why does it take so long to help someone avoid homelessness? Right? Common Relief is an identity verification and payments platform. We allow helpers to quickly interrupt evictions with emergency rent relief. Together, we can stem the tide of homelessness about to crash on America's shores. Okay. So I'm Joseph, like I mentioned before. I'm the founder of Renaissance Payments, a financial technology company, and Common Relief by Shelter. Chris Bailey and I met in a Social Venture Partners Dana Jewett residency. Chris has experience at Bain and Company, strategy consulting, and he's an impact investor with Coalfield Development. We've collaborated and worked on several social impact projects, and all aligned with technology. Okay.
So we're all very, very aware of the COVID-19 crisis, right? It's our daily lives. But I don't think that any of us think about on a daily basis what that economic disruption means in terms of housing insecurity and homelessness. Because of job loss and economic contraction, there are about 40 million people in America, 30 to 40% of renters, who are at risk of being evicted. And right now, their only safe haven, safe net, are the emergency eviction stays that have been put out by state and federal governments. But unfortunately, those eviction stays only have teeth insofar as stopping you from getting evicted. It's nothing to do with back rent, nothing to do with penalties for late payments. So when those eviction stays run out, that bill is going to come due, and you're going to be on the hook and potentially be evicted. On the flip side, there are state, local, federal, and nonprofit organizations who are stepping up to start to provide that relief, that actual payment that's necessary to stop that. Unfortunately, we've never seen this scale of payments before. And so the infrastructure is just not in place to deliver that relief. Common Relief was inspired when Joseph and I read an article about rent relief in Dallas, and so one of the organizations was saying that it would take 3 to 4 weeks to process an application. Maybe that works for some people, but we felt that that was really, it was unacceptable. Who knows in general terms that they're going to be evicted in 4 weeks and have 4 weeks to wait. And so that's the problem we're solving, going from sort of that terrible timeline to something that's actually useful.
All right, so Common Relief is a unified platform that provides payments, identity, and eligibility verifications. So a little bit similar to some of our cohort here, we borrow the latest technologies and we put them all together so that online forms, city phone operators, and AI chatbots can work together to consolidate and verify eligibility and landlord relationships. We take in a lot of data. For instance, for UrgentNet, we can verify people all sorts of ways through their utility bills, through a means of various systems. We provide the financial clearance on pre-approved documents, and then we make that payment directly. As Chris said, I had a lot of, I want to say, righteous anger, right? Whenever I found out that it was going to take 4 weeks for people to get paid. Rent relief is an ambulance. It should not be a slow moving bus. It needs to get there very quickly. And that's a problem that we're uniquely qualified to solve. Okay. So our tech has been proven to work, and now we're seeking to launch and scale. From earlier this year, we use this exact same technology to distribute $5 million in aid. Here's an article from Dallas Business Journal. So inspired by the same thing, right? Which is how do you process complicated transactions? That's a particular skill set of mine, and we're able to help a lot of businesses in the minority community here in Dallas and even broader in the United States get access to PPP loans that they were denied for elsewhere and they couldn't get because they didn't have a banking relationship. So some of these complicated systems that took a long time before, that's our specialty, making the hard easy. And right now we're in talks with partners all across and at the state level to do some significant pilots distributing this aid and verifying landlord relationships. Okay. So funds, go ahead.
Good. Oh, just gonna say, so funds raised during this Friends and Family pre-seed round will go directly to funding the pilots, right? Our model works as a processing agent, so we get paid on money distributed, but there's obviously upfront costs associated with launching those trials. And so raising these funds would mean being able to front load those costs and launch successfully. Just in closing, sort of our guiding light and what we want to take away is we provide faster, document intake, and unlimited processing capability, which means that at the end of the day, we have fewer evictions and less economic disruption. So with that, I will hand it over to the judges. Thank you very much.
Well, I just want to say excellent pitch. And I just wanted to ask you, in this space, I'll just kind of trying to think of who do you see as your competitors, or do you have any competitors in this space?
Paper checks, as Joseph likes to say.
Yeah, yeah, paper. And so my church, right, has a rent relief program. So all sorts of organizations do. They're not optimized for back office services. They're not, providing financial services on the day to day. And so this is something, that's the reason why it takes 3 to 4 weeks. And that's, it's a massive problem that runs from the state level, right, with the partners that we're talking to there, all the way down to local community organizations, and my church included. And so what this is a means for them to distribute this funds equally. On the state level, what we're seeing is, administration fees for distributing funds at numbers about 8%, because of all the, massive workforce that's required to sit there and do all the paper, but it's 2020. So our competition is paper. Yeah.
Guys, great mission and appreciate the pitch. So the hope is, I think, the hope for everyone is that at some point evictions start to slow down dramatically, right? It's not as large problem as it is right now. What happens to you guys then? What is your plan at that point?
Yeah, that's a great question. This technology, while it was designed in response to the COVID-19 eviction crisis, isn't limited to evictions. It's not limited to rent payments. It's really applicable to any sort of philanthropic payment. And so the vision is to prove it out and make a huge impact through COVID-19 eviction payments, and then translate to any sort of nonprofit rent, or not just rent relief, but nonprofit relief, any sort of direct payments.
And the beauty is we add eligibility right into the mix. That's something that's currently not part of it. So automated eligibility and payouts. There's lots of ways for nonprofits to receive money. Very difficult if you ever work with an organization that's distributing funds overseas in various currencies, et cetera, right? That eligibility, the verification, and the audit trail that's great for their foundations that they have to report back to, or government agencies, is all enclosed inside of one really easy payment system.
Mm-hmm. So you talked a little bit about the partners that you have, some of the traction that you guys are headed. What percentage of your partners, you mentioned that, I know Juan had asked you, once evictions are kind of subsides after a time, what percentage of your partners do you feel like you could still use this technology with, and that they could actually utilize your platform, I would say? Because right now you talked heavily about the evictions and payment processing, but what are your current partners that are outside of that you could still leverage your partners with using your platform?
So surprisingly, we walk in the room with payments and, everybody's like, oh, well, that's great. But they're like, oh, well, we're currently doing it. Then they're wowed by the time savings that they get in applicant processing across whatever they're doing. So their case management department, that's who actually really, really loves these things. Is anyone who's managing cases, anyone who's working directly with individuals. They see it as a saving grace.
Gotcha. Thank you.
Let me just say, great pitch, guys. Let me just say, I'm glad I'm not a judge, because this is a really hard decision to make. So you guys have your work cut out from you. While our judges go and deliberate, we're actually going to hear from one of our past winners, which is Canaries, which is a wonderful organization. And we have Priya there. Hey, Priya. We're going to hear from her now while judges go deliberate. Priya, go for it.
Hi, everyone. I hope I'm audible.
We can hear you, Priya. Go ahead.
Okay. I was looking to share my screen. Just give me a second. It's not letting me share the window that I want. sorry. Give me a second.
It's okay. Technology works until it doesn't. And love the bird, by the way. That's beautiful.
I tried looking, I just found this as one of the filters, and I really like, it's a canary. It's not a canary, but close.
While you're trying to get out of it, there you go. Perfect.
Okay, perfect. Okay, okay, I guess I'll just start. Okay, so hi everyone. My name is Priya, and thank you SVP and bigBANG for having me on this vibrant Friday afternoon. I'm very happy to be here with all of you and to share the tremendous growth that Canaries has achieved since our founders, Manny Price and Star Carter, won the competition last year. I'm currently working as a senior data analyst and helping the Canaries team take data-driven decisions and formulate metrics to score organizations on diversity, equity, and inclusion. Like most of us, I remember my first day at job in corporate America, all bright-eyed and bushy-tailed. And I want to take a moment here to address the naive decisions we make and how we often fail to realize that our jobs are a lot more, is about a lot more than just the dollars we make and the hours we spend. We don't have the foresight into the challenges that we might run into and end up making uninformed or worse, misinformed decisions. Research shows that there's a huge gap when it comes to a safe channel of communication between companies and employees. This is one of the greatest challenges that's facing corporate America today, and the one that we are solving at Canaries using data-centric approach. Our founders started Canaries in 2018 to solve workplace inequities they experience themselves. We help the companies get the specific insights they need to diagnose, prioritize, and optimize DEI efforts by facilitating transparency and providing safe, anonymous way for employees to share their voices. And I joined Canaries to make sure that our future is just as bright as we see from our first day at work. I'm super excited to be here and share all the different sectors that Canaries has made a mark. First, we have grown to a team of 20 plus members now. We have had a number of people join, leading experts from their fields during the course of this year. Over the last few months, we have seen a huge uptick in web traffic and signups since the renewed focus on racial equity. Our social media has taken off by a significant percentage in engagement and followers. We are proud to announce that some of our new and exciting features that we baked into our platform to provide more value to our users. We launched a dedicated resources website that features the company's webinars and interviews with a range of DEI leaders, as well as our research, toolkits, and other helpful content for users, all free. We now have a dedicated place for all the original content, curated content and blogs organized by topics, including COVID-19 business impacts, company culture news, featured select articles from leading business publications. And our internal team is also contributing to the section, so something to look into. Our users can now also find their next stop in their career journey through the Canaries job board. Over the course of last year, we have conducted several intensive research projects in partnership with the Dallas Bar Association, and its sister associations on topics like paid parental leave and diversity among top Dallas law firms. We also released a report highlighting the social inequities regarding the paid sick leaves offered to employees during the COVID-19. The renewed focus on BLM also saw a significant increase in our engagement numbers. Our demo requests went up by 3 times in Q2, and our recent feature on GMA saw a demo increase go up by another 300%, and half of those were converted to qualified opportunities. We also announced partnerships with leading national advocacy organizations. This will allow our founding partner organizations to utilize our platform, give a voice to their underrepresented members, and utilize the data uncovered by Canaries to influence workplaces everywhere. We aim to release impactful insights with the joint DEI assessments in the coming months. I'm so happy to inform you that Canaries was not only accepted into the inaugural Google for Startups Accelerator for Black Founders program among a pool of 900 plus applicants, but we also landed a funding at the end of the 3-month-long program. In addition, we have been accepted to a host of other startup programs. We were featured in numerous media segments, radio programs, and podcasts, including Forbes, Fox 4, and Good Morning America. Canaries was named as a 2020 startup to watch by NTXNO. Our founders, Mandy Price and Star Carter, were named as top 100 most powerful women by Entrepreneur Magazine. Mandy was named Dallas Startup Week's 2020 Rising Entrepreneur and recognized as one of the 50 most powerful women in tech award by the National Diversity Council. We often get this question, why the name Canaries? Well, the canary in a coal mine was once a mining tradition to ensure working environments were safe for underground workers. Coal miners would often carry the bird into the mines to monitor air quality. Return of healthy birds indicated that the mine was non-toxic, desirable, and safe to work. While it's been more than 30 years since the last canary was flown to a coal mine, Canaries exists today to help individuals and organizations create more inclusive workplaces by providing clear signals that foster non-toxic cultures and bring the beauty of differences into light. With this, I invite you all to join us, be a part of the change, and make a difference. Good luck to all the teams, and may the best team win. I'm happy to answer any questions if anyone has. While the judges are deliberating on the results, I had to talk about more about Canaries and what we do. So any questions are welcome.
And we're back. Now listen, guys, this was tough, and thank you, Priya, for giving us your update on Canaries. I also want to let anyone know that if you have any questions about the Southwest Angel Network, please reach out to Heather, and she'd be happy to answer any of those questions. She's our resident expert on that. Now, I have to be honest, things got a little heated in the breakout room. They actually had to bring me in to kind of keep the people. But after careful deliberation, some strong talks, our judge, Jennifer James, is going to announce the winner. Jennifer?
Yes, so as David said, it was very, very tough. I want to start off by saying that everyone that pitched today did an amazing job. Very impressed with the stage at which your companies are in. And I just want to encourage everyone to just kind of keep going regardless. Truly enjoyed the pitches today. Again, I think all the judges can attest to that. But without further ado, I wanted to go ahead and announce the winner. The one that we have chosen is Credit Mountain with Nathan. So congratulations, Nathan. You've been chosen as our winner for the pitch competition.
Thank you so much. Greatly appreciate that, guys. This is going to be immensely helpful to us. You know, we're busting our back ends trying to get this product live, and our credit union partners are very patient, and this is really going to help us to bring on some more resources and speed it up and hopefully start to make a difference with the whole credit access disparity we see in this country. So thank you, guys. Appreciate it a lot.
You're welcome. Good job. Thank you, everyone, once again.
Yeah, we want to say, again, congratulations, Nathan, and your team at Credit Mountain. We want to congratulate everyone who pitched today, Joseph, Chris, Danny. You guys have some incredible businesses that we know will have a great impact on the world. We want to thank everyone for joining us today. I want to thank all three of my judges, Cheryl, Juan, Jennifer, and we will see you guys all next year at our Fast Pitch competition. Have a great day.
Thank you, guys.
Thank you.
Thank you all for the opportunity.